Welcome back to Daytime Tri-Cities and our Real Estate Today, brought to you by Evans & Evans Real Estate. Today we are talking about tax time and what that means if you own investment property or rental property. We have Rebecca Wilson here with us, one of the realtors from Evans & Evans Real Estate. Rebecca, thanks for meeting us out here.
Thanks for having me. I'm excited to be here.
Well, certainly this is sort of that time of year. Everybody's getting their documents together, and of course that's a bit different process if it comes to someone that has investment property.
That's true. There's a lot of things that you have to get together that you're not used to doing whenever you have just your normal 1040, your normal taxes. So if you're a rental investor, then you know all this most likely. So you have to get your mortgage statements, you have to get your rental income put together. And whenever you're putting your things together, you'll get a tax organizer from your CPA, most likely. And if you go line by line with that tax organizer, that's going to help them. It's going to help you reduce the cost of their tax prep because it's already there for them. And it's important whenever you have investments, and especially with real estate, to get with a CPA that you're comfortable with and that is on the same page with you. You don't want them to just be a tax prepper. You want them to also be a tax advisor, a planner. So that's the best thing you can do as an investor, is get with your CPA and minimize your taxes at the end of the year and maximize your profits.
That sounds good, I'm sure, to all of our viewers out there. And as you're going through this process, you talk a little bit about active versus passive. What does that mean?
Right, so passive income, typically a rental property is going to be a passive income. And that's because you're not actively managing it all the time. You're not spending lots of hours managing the property. And so whenever at the end of the year, if you have losses, those will be deducted against your other passive income rather than your ordinary income.
And you talk too about really managing your different expenses, and I would imagine sort of being thorough throughout the year, just like you do on a personal level, can make a big difference.
Yes, it's important to track all your expenses, and it's good to just put it in one place while you're doing it, so you always have it ready to go come tax time about now. And the sooner you can get in your taxes to your CPA, the better, because there's going to be questions that could really slow down the process.
Okay, so you want to make sure to start that process quickly. What about, I know when people have rental property, a lot of times there's a lot of other people that they're employing to come in to do a specific thing, fix this or repair that. How important is it that you have that paperwork ready to go, and do you need to be sending out specific paperwork?
Well, you do need to keep up with those expenses, but as a rental investor, you don't have to send out 1099 forms to them. So that's good, unless you are maybe, if you had an Airbnb business, which is a short-term rental rather than a long-term rental, you need to talk to your CPA, because that can sometimes be considered a business, rather like a Schedule C business rather than a Schedule E business. And in that point, you would need to do 1099s. Question for your CPA. I
was going to say, so there's a lot that really goes into this, but it sounds like, bottom line, it's quite the process, and the more you can do ahead of time, the easier it's going to be.
That's true. That's true. And there's a few things to remember that some people forget or don't know about. With the Tax and Job Act of 17, you can actually buy refrigerators and appliances and other personal property, not just the house, and you can depreciate it all at once. So that can help the bottom line.
And in the end, it sounds like there are some really great tax breaks that you can take advantage of when it comes to being an investor.
Exactly. So you may not be able to, offset your W-2, your wages, or your ordinary income with this passive income, but at the end of the day, for the depreciation that you get to take on the property, it offsets that rental income. And a lot of times you end up not having to pay any taxes on your rental income. So that's a plus.
Yeah, that should always kind of be your goal, right? And once again, how important is it when you're picking out your CPA that you guys really have a good relationship?
Yeah, just like with real estate, when you're picking a realtor, you want to feel comfortable with them. You want to feel like they have your best interest and that they're taking the time to make sure that you're maximizing all your deductions and minimizing your tax liability at the end of it.
Very well said, and certainly a very important topic, tax time. Nobody likes to talk about it, but it is rolling around. Rebecca, thank you so much for the great information.
Thank you so much.
If you would like to get in touch with Rebecca, here is her information, and you can find her at Evans & Evans Real Estate at their office in Johnson City. The preceding portion of Daytime Tri-Cities was sponsored by